all expenses are a normal balance of a debit. All payables, normal balance, credit. Okay? So, looking at the payroll register, this is when we did, of course, in chapter 12. It's not getting real clear. Okay. We have total earnings, right? We have all of our deductions. We have our net pay. If we took this and we put it into T-charts, this is what it's going to look like. The salary expense is the total earnings, and we're looking at the totals actually across the bottom. Okay? The total expense is total earnings. So we're going to take this. Okay, so we know where that number's going. Okay, so salary expense equals total earnings. Same thing, that's where that number comes from. Now, you're going to have a statement written in your book like this. Okay, so they're going to give you these numbers in a sentence form. I shouldn't have marked over that. Okay, but I just want you to see how we're making the connection to what we did last chapter. Okay, then over here we have all of our payables. Okay, so we took out federal income tax, Social Security tax, Medicare tax, health insurance, and the retirement plan. So again, the second we pull those out of our employees' checks, they become a payable for us as the company. Okay, so basically this right here is coming from this. Okay, so all of those totals come over here to become these payables. Okay, and then what do we do mathematically with total earnings and total deductions? Aaron, what do we do mathematically? Subtract it, and that gave us the net pay. And the net pay is what we said we pay our employees, right? Yeah. So that's the cash coming out of our account going to them. So net pay is going to be our cash. Okay, and cash going out, cash payments, is a credit. So this is one transaction. It's got a lot of lines to it. Okay, so we started the year with kind of the rule of one debit, one credit, right? We've kind of moved away from that. We did some petty cash where we had multiple lines. Now with this, we're going to have multiple lines. So all of our debits have to equal all of our credits. That's kind of the new rule now, okay? Because we're getting a little bit more complex. So here is a debit, and these are all credits. So your check is to make sure that your one debit equals all of your credits for that transaction. Okay, so there's the T's. Again, in your assignments, you're going to see something more like this. It says paid cash for the semi-monthly payroll, 6209.9787. Like I said, I drew over that. I can't see it. And that's the net pay. That's the cash that you paid. Then it's going to tell you the rest of those pieces. The total payroll was 8076. So that's the total earnings, which is the salary expense, less the deductions, and it's going to give you the totals for all of those payables. Okay? Now, to get it into the journal. Again, it's writing a check, so it's a cash payment. Okay? Our debit always goes first. We're still using the current date, so this is the 15th. That was our payroll date. It told us here December 15th. Okay? Salary expense. It does also give us a check number. Okay, so that check number is going to go in as our source document. Because, see right here, this is labeled check number instead of source document because of the kind of journal it is. We're pretty much going to always be writing a check. Can you think of a time where money's going to come out of our checking account that we don't write a check? I know you know it. You just got to go back in your memory. Money came out of your checking account, but you didn't actually write a check. It just kind of happened. Bank charges, yeah. Okay, so that will still be a memo on this, so you'll still put like memo 3 or 5 or whatever it is. So that'll be the only time that's not a check, is on those bank charges, okay? Or credit card fee charges that come from the bank as well. All right, good. I'm glad you were able to pull that out, your memory there. Okay, then of course all of our payables are here as a credit, okay? And then this debit minus these credits should give us the cash credit, which is the amount of the check that we're writing. And then all of our credits, these plus this, will equal this one debit. And that's that full transaction, okay? And it walks you through with the little dots. Put the date, put the account, you got the check number. This is total earnings, okay? Right there, total earnings. And the amount paid to the employees, which is net pay. These are the amounts credited, and these are the payroll deductions, okay? So hopefully this will be a good little reference page for you, okay? All right, so let's go to your working together 13.1. So you remember we talked about, well, we wrote the big check to payroll account. And that's what we're recording here. And then from that payroll account, we wrote each individual account, right? And I guess a good reason for doing that is because of this right here. We wouldn't want to have an accounts payable for employee income tax of Allie and the employee income tax of Nico, right? That's too many accounts we're having to add in for all of our employees. So that's kind of why we lumped it all together. Make that payroll check, and then kind of have that separate account to make all the individual employee checks. Okay. So going to 13.1. Okay, so here it says recording a payroll payment. Okay, so it's recording and actually paying the payroll. I want you to kind of add that. Okay, because a little bit later we're just going to focus on the words record because we're not going to be paying anything. We're just going to have to record something. Okay, so this one we're actually recording and paying. And what we're doing is we're journalizing the check that we're writing from the general account to the payroll account. Okay? This is that check we wrote to that odd payroll account, like we did in Chapter 12. Okay, and so you have it in your notes. I want you to make yourself some T's over here. What's the normal balance of any expense account? Okay, debit. What's the normal balance of any payable account? Credit. Okay, and what's the normal balance of cash? Debit. Okay, those three accounts basically are what we're using right now. And if you can just remember the normal balance, you'll know where everything goes. Okay, so let's look at the actual details for working together 13.1. All right, so Lakeland's company payroll register has the following totals for a semi-monthly pay period, May 1st through May 15th. So what's the date of our check going to be? The pay period is the 1st through the 15th. What day are we paying them? The 15th. Okay? And of the current year, they do want you to do the T accounts, and we're going to have the cash payments journal, and then we're going to have total earnings, federal income tax withheld, Social Security tax withheld, Medicare withheld, and then it just tells you to do the T accounts and then journalize the payment. Okay? So total earnings, where is that? What's that going to be? What does that translate to? What account? What words did we use? Salary expense. Okay. Federal income tax withheld, what does that translate to? Employee income tax payable. Okay. And Social Security tax withheld translates to Social Security tax payable, and Medicare withheld translates to, okay, Medicare payable. And what's the other account that we're going to use here? Cash. All right, so the salary expense, that's our total earnings, right? So we'll put that in, 13,800. Remember this, it's the same thing as total earnings. Okay, federal income tax withheld, employee income tax payable, credit, right? Payable, so 925. Social Security tax payable, withheld, 855.60. Medicare tax payable, 210. 10 cents. Okay, now it doesn't give us a number for cash. How do we figure it out? Okay, so your total earnings, wait, what did you say? Total minus expenses. Total, what total? Okay, there we go. So the salary expense, which is the debit, minus all your payables. Okay, so total earnings minus all the deductions. So 13,800 minus 925 minus 855.6 minus 210, 11,819.30. Debit or credit? Debit or credit? Raise your hand if you think it's debit. Raise your hand if it's credit. Okay, remember we're writing a check. We're writing a check. What is it? Credit. Okay, so 11,819.30. Okay, so cash payments, remember we write the check. That's the journal that we're going to. Okay, so this is what it looks like. You've got two general columns. You've got an accounts payable debit column, and you've got a purchases discount credit and a cash credit. So these are going to come up a little bit later, okay? What's the normal balance of an accounts payable? Credit. Okay? So if this is a debit, what are we doing if we use this column? Paying it. Okay? We're paying what we owe somebody. Okay? Now, in this case, we're not paying these right now. We're just recording them. So that's why we're using the general columns here. Now, a little bit later in this chapter, we are going to pay these to the IRS. Okay? And it'll be a cash payment, and we'll have to decrease what we owe to them. And so we will use this column. Okay? And then purchases, we'll get to that a whole lot later. And then, of course, the cash credit. And it's only going to be, notice there's not a cash debit and a cash credit, right? There's only the cash credit because we're making payments. We're writing checks. Okay? So we are on the 15th of, what was it, May? So 2020, May 15. Okay, debit goes first. What's the account that goes first? Salary expense. Okay, what's the check number? Book gives it to us. Okay, so yeah, 564, check 564. Okay, the debit amount is the $13.80, or excuse me, $13,800. Oh, it does tell us we're on page 6 too, doesn't it? Can't forget that. Always check those blanks. And then we need to put in all of the deductions. Okay. So these are all of our payables, and they'll go right here in the general credits column. So employee, income tax payable for $925, and Social Security tax payable for $8,560. Medicare tax payable for $210. So what are some other things that we pulled out of the account that could end up in this list, or pulled out of people's checks? Besides these three. These are the required three, right? What are some other ones that could have been pulled out? Healthcare, retirement, charitable donations, right? Okay, so this list could be pretty long, just depending on what gets pulled out. But these are the minimum three right there, okay? Am I finished? One more number, right? What is it? The cash. So the cash credit, 11,819.30. Okay. All right, so here is our general debit coming from total earnings. Here are our deductions and our credits. Okay, and then of course here's our cash. And then all of the credits, this plus this equals this. You want to do the check so that all of your credits equal all of your debits for that one transaction. Always a good check to make sure you didn't leave something out. Okay? And again, just making sure debits equal credits for each transaction. Okay? Now, the other thing I'm going to have you write down right here is that this is all about the employee. Okay, because we're going to talk about the employee taxes and the employer taxes. Okay, and so we're going to have to really remember and distinguish between which ones we pulled these out on behalf of the employee. Okay, but if you remember back to when Ms. Jackson was here, she talked about how the employer has to pay some taxes on their end as well. Okay, and I think that's kind of where things get confusing for you guys, is we're trying to distinguish between what's employee, what's employer, and that kind of thing. Okay, just remember, we're just looking at basically 4 transactions. Okay, good with that? Hopefully this page and that green page help you. You've still got some time, so go ahead and page 381. You've got the information to do that on your own for that.